MultiPair EA is one of the best EAs we use on small and bigger accounts, but some time ago we lost a funded account, a second stage trading.com account, and I recorded a video about it because I want to be fully transparent with you. My team and I spent over a month figuring out what went wrong, why we lost, and what to do so it won't happen again. And even in one of my behind the scenes videos I said, so I think we should go even lower risk with the new account we start. But interestingly, just lowering the risk didn't really help. What we found out with further analysis is very interesting, and I will share it all with you today. And this applies to any expert advisor, not just the MultiPair EA. That was just a perfect example of how I miscalculated the risk properly. So that is very important for all of us, myself, my team, the VIP club traders, and you guys, our loyal subscribers. And if you'd like to support me in testing and trading more and more EAs so that I can share all results, whether they are positive or negative, with you, simply subscribe to the channel. That's all I'm asking for. That's all I need to make this work. And before I show you the new account, let me show you the previous one, where I steadily climbed to 30%, not 20, because the target on trading.com is just 20%, but with the MultiPair on this stage I climbed to 30%, and then the account scaled to 20k. I requested a withdrawal of $1,600, and then boom, right in here we lost the account because there were open positions with the Swiss yen. If I show you the orders and I switch to closed orders, you will see that the very last orders are those losses with the Swiss yen. Right in here there are a few more, and I've lost the account. However, I didn't lose money from that because the account costs $1,000 and I have requested a withdrawal after the first stage of $1,600. So I am $600 on profit. However, I didn't start immediately the new account, but I really wanted to take the time to analyze what happened. And you will see that in this second stage we were trading with 0.20 as lot size for all of the currencies. And if I go back a little bit earlier, you will see that most of the time we were trading with 0.10. So at the beginning it was 0.01, but we figured out that that's too slow, and then we increased to 0.10, and then as the account was growing, the lot started to increase to 0.11, 0.12, 0.13, and we reached the target. And it was actually quite easy, right? You open an account, you put the robot, it starts trading, you set certain amount of risk, you reach the target, you withdraw the profits, everybody's happy. But after analyzing the results, we figured out that this risk is just too high. And even though I made money, because the trading.com model is really straightforward, once you reach 20% or $2,000 of profit in a 10k account, you can immediately withdraw $1,600. But the real question actually is how to stay longer within the 10% drawdown rule so we can climb to the fifth stage where we can actually make some really good profits. And I'll show you here my new account where we are already on a profit. Actually, initially here we were trading the euro stable, but it was going too slow. It made like 2% for a couple of months, so I decided to continue with the MultiPair, and we started trading with 0.07. Simply, I lowered the risk. But imagine what happens after I backtested it. It blew the account. So that 0.07 is still too risky for a funded account with 10% drawdown. And on another platform, I want to show the backtest exactly for the Swiss yen, the pair that lost the account. And I'll show you the expert property. So I'll be backtesting it with 0.01, which is the minimum. And I'll be testing it on a 10k account, just the same if this was a funded account. And I'll be backtesting since the beginning of the year, or let's say beginning of 2024. So we have 2 years of backtest, and I will click on start and let's see how this backtest will go. And here it is. You can see that the balance went on a profit. There are two bigger dips, a few smaller ones, but overall, if I click on the report, you will see that with a minimum quantity of 0.01, my drawdown is $439, which is absolutely fine. And because we have 10% drawdown, I can actually trade with 0.02, like double than what we see on the backtest. But if I trade with 0.07, obviously I'll be losing the account, and of course 0.1 would be even worse. So pretty much what happened, I was lucky to trade the first stage in the period when there were no huge drawdowns and I kept high risk, but then when there was a drawdown, I've lost the account. And those of you who are following carefully and are smart enough would say, okay, then we need to find out the right lot size for every currency pair. Don't worry, we already did it. So we've put together in a table the backtest results, and you can see that for the Swiss yen, the backtest that we've made on a 10k account with the minimum lot is very similar at 437. I think with the backtest that I just did, it is very similar, yeah, 439. And you can see that for the other pairs, drawdown is absolutely different. So with the euro cat, it is 232. With the euro dollar, check that out, 3,148. This means that if you're trading with euro dollar on 0.01, it is very likely that you will lose such an account because of the 10% drawdown limit. The pound dollar is 834, which is still high, but we can trade with 0.01, and the best pair in terms of drawdown is the euro yen, which also has a high return to drawdown ratio because the net profit is 222 and the drawdown is 149. And based on these results, I easily decided how much to trade in my live account, where I decided to keep just the Swiss yen, the euro cat and the euro yen. Just I removed the euro dollar and the pound dollar, and for those I can actually trade with 0.01. I can trade 0.02 for the euro cat and 0.03 for the euro yen because I am still within the 50% drawdown limit that I have for my personal live accounts. And you can see that based on the backtest, we can still make over 6% amount, which is absolutely good enough. And now for the new trading.com account, I have decided to remove just the euro dollar because simply the drawdown in the past is big enough to break the account if it happens again. Of course, it doesn't necessarily mean it will happen, but since it happened once in the past, it is very likely to have a huge drawdown again. But I'll keep trading the pound dollar with 0.01, and I want to show you how exactly I am doing that. So I'll go back to the trading.com account. You can see that on the live account I have left the Swiss yen, the euro cat and the euro yen. And now for the trading.com accounts, I will make the following changes. And when you make changes to a grid martingale system, guys, make sure all trades are closed, because if they are open trades and you decide to lower the risk, you will mess up the current positions and you may not recover from that. So I was waiting for all trades to close and I disabled the algo trading so I can show it to you in the video. So what I will do first is I will remove the euro dollar. Then for the pound dollar, I will go down to auto lot size, not 7 or 6.8, but just 1. Max loss in percentage, I keep it to 7 because, as I said in other videos, if you keep the max loss to 9.5% or something and you hit it, then you will not have space to recover. So I prefer to keep it somewhere at 7 or 8%, and I will click on OK. Now for the Swiss yen, I can afford to trade 2 times the minimum quantity. So I'll go back and put 2 in here. I'll click on OK. Then for the euro cat, because of the low drawdown in the past, we can afford to trade 4 times the minimum quantity. quantity, the minimum 0.01, so I will just enter 4 in here. For the euro-yen, it is 6 times a higher lot, so I will go to euro-yen and I will change to just 6. So with the euro-yen, I was trading pretty much the right lot size, but with the others, it was just too much. I will enable the auto trading now, and now I'm comfortable finally trading the multi-pair on a funded account. Of course, it doesn't mean that it still might not lose the account, because, you know, extraordinary things happen, like Trump likes to talk and to affect the markets, but at least I am comfortable trading with such a risk based on the performance in the last 2 years, plus the drawdown in trading.com is static at 9,000. So once I make some money and I'm already like 4% up in this account, I am even more relaxed because there is more space until the drawdown limit. And there are actually 3 options you can pick from on how to manage such a funded account with 10% drawdown. And that applies for any strategy, any expert advisor, not just the multi-pair. Number 1 is you can go risky, just as I did on the first stage and the second stage in the previous account. And you see that there are huge periods where the EA didn't have a drawdown. So that starts from 11th of December 2024 all the way to the end of September 2025. So for this time, if I used very high risk, I'll probably hit a few times the 20% target. But then eventually, at one moment, I would lose the account. Number 2 is you go with a measured risk based on the backtest results, just what I did right now, where I have all the currency pairs with the right lot according to the drawdown in the past. And number 3 is you go with a very safe option, and right below the portfolio I showed to you, I have put together another 4 example portfolios where you can trade with a very low risk, just 2 currency pairs, let's say Swiss yen and Euro CAD, 4 different currencies in 2 pairs. Okay, so if one of them moves drastically up or down, it won't affect the other currency pair. But in this case, you agree to make just 0.30 or 0.18 and even less than that, but you will make sure that if the 2 currency pairs move in the opposite direction, which is very unlikely to happen, but let's imagine euro goes aggressively up or down, it will probably affect the euro CAD, it will probably affect the euro yen, and you can see that if these 2 happen at the same time, I'll be trading such lots so that I'm still not reaching the 10% drawdown. So this is like very skeptical and safe approach you can probably use on a live account, on a big live account, but I decided to go with the second option. And let's see if any of these 4 currency pairs with the lots I decided to use will exceed the drawdown we saw from the backtest. And that's really how I want to do it, to take a risk that is measured and calculated based on the past performance of the expert advisors we trade. Not just the multi-pair, but any of the EAs we trade. And it's up to you if you want to go riskier or if you want to wait a little bit longer but keep the account, and it will reach the target sooner or later if you use small risk. But with this table, and we shared it with our VIP users in the private Discord channel, with this table we can actually calculate exactly how much we should size our positions, because low risk is how much. It should be a precise value, right? As always, guys, I thank you so much for staying with me until the end of the video. I really love all of these analysis. I hope you appreciate them too. Before you go, check out this video on my side and you will learn about another expert advisor we are trading successfully on trading.com account. As always, I love you, trade safe, and I'll see you in the next video. Bye.